Hey traders, Raghee here. Welcome to Charts and Coffee for September 27. We're kicking off the last week of September. Higher expectation for redemptions as people like to pay themselves at the end of the month. And, the futures, take a look at the futures from last night. Quite a roller coaster in terms of the gap up on the Sunday open. We closed the gap going into the New York session, which I'll look at roughly 7 a.m. Eastern. We continue to head lower. So you can really see where the weakness started to accelerate, really with the Asian close. And then the closer we got to the U.S. session, we've been weakening on the S&P, and then here's the NASDAQ. So definitely that risk aversion rollover coming in after the gap up. Gap closed in the NAS much earlier. We get the 4 a.m. Asian close, and that's a completely, there's definitely a line in the sand with that Asian close. And now we have a little bit of weakness coming into the bell here in 28 minutes. All right, so this is what we're sort of inheriting in terms of risk appetite this morning. You can see it again. I'll pull up the Dow, gap up, closing the gap here around 7 a.m. Eastern, and continuing to remain pretty darn weak. So again, this is what we'll see. Now, this doesn't mean that we're going to see weakness all day. This just means that going into the U.S. Open, we've got some weakness. The gaps are closed, and then we can look at what the clearing range ultimately does and what we do after 10 a.m. And speaking of that, let's take a quick look at the economic calendar here, and that is, let's take a look at the 27th. All right, so what do we have coming up? We've already had an 8:30 a.m. core durable goods number. Now, this is something to consider when you look at the intraday action. Did we accelerate in any meaningful way at 8:30? Yeah, to the upside some. So core durable goods, see what happens a lot of times in financial media is they'll say, oh, the markets are down after core durable goods. No, they're not. They've been down for some time. Core durable goods actually set the market a little bit higher. In the case of the Dow here, you can see that within an overall weak market that began far before the 8:30 announcement. So remember, these are just some of the blatantly stupid things you're going to hear on financial media. So 7:45, I can't say Lagarde did anything to the market. Core durable goods, durable goods. We have FOMC member Williams speaking. Remember, Williams is the one academic on the FOMC voting. He's a permanent voting member. He usually bats cleanup after Powell, but we've got Williams at 9 and noon because apparently his schedule is very open today. And now we've got Brainerd, at about 12:50 p.m. Eastern. So what we don't have in high impact, high heat, hot zones by way of economic data today, we definitely have morning, which is basically now, and midday, which could certainly shape the second half of the day with Williams and Brainerd. All right, so that's what's on the calendar. What are we looking ahead to? Well, remember, we've got Chair Powell testifying about the CARES Act. And then we've got on Wednesday, a lot of ECB and BOJ, as well as Powell back again. So the first 3 days of this week and the last 3 days, last 4 days, right? Yeah, of the month are just peppered with FOMC members, Powell, and then we have one of the main economic pillars in terms of macro. If you measure macro and the rate of change, got to watch that GDP. GDP is coming out on Thursday. And then Williams, Bostic, Evan, the Fed Palooza begins. It continues right into Thursday where we get core PCE numbers, yet another inflation number. This one's the Federal Reserve's pet inflation number. That one's their fave. And then we have ISM. So we have a very busy week of data. And you've got to think about the way in which market participants want to pre-position. How do they want to position themselves in front of these kinds of events. So wow, we got a lot going on this week. Should be a good one. All right, so let's kick it off with some questions here. Great to see everybody. As always, happy Monday. Yes, good morning, good morning. All right, good morning. GC is taking out Friday's high. Did that trigger the long, or would you like to see? Well, okay, so great question. The thing about gold, and let me bear with me one moment. Let me see if I can't. Oh, this is what I wanted to do. Pull up my trade station. And take a look at gold. Now, let's go to the daily gold chart. So we'll switch this over to the daily. And what we have here, James, is in terms of the kind of chop that we're seeing, we've seen this once. We had the similar setup where we took the high of the inside candle out on the 20th. And then we're wondering, are we going to see something similar here the 27th? I think we could. It's this very similar pattern inside day. If there are any patterns that you are interested in, sort of making part of your toolkit, let them be things like inside days and minor lows, minor highs. They're going to be really powerful, far more powerful than much more complicated and increasingly subjective patterns. I've got a book. I was actually going through my bookshelf. You can see the bookshelf there behind me. And where did I put it? There was a book that I bought. Oh, you know what? I do want to look at this at some point. There was a book that I bought. This is how old school things were in the 90s. It was a book called The Book of Charts, put out by a group of traders who are generally scalpers, but they were talking about intraday patterns that were very popular in the mid to late 90s. And it's literally inkjet printed paper with just an old school binder around it. But I still have it, 20 some odd years later, I still have it because patterns are patterns. But when you skim through chart patterns, and I'm talking about pennants, triangles, cups and handles, smiles, whatever. I mean, that's all those names are in this particular book. And I have been meaning to flip through it. They're very subjective. If the best way to make any pattern objective is either to make it a single candle pattern, as I've done throughout my career, inside days, minor lows, minor highs, or to simply find the trend line or the support and resistance of the pattern. For example, head and shoulders, it's a trend line that makes a difference. Cup and handle, it's some sort of trend line or horizontal support or resistance level. So M's, W's, same thing. So if you can reduce the pattern to the reaction level of the pattern, you're going to be so much better off. And that's exactly what we do here. It's not so much a pattern as it is a candle, highs, lows, telling us where momentum might be waiting if we run stops to a certain level. So yeah, it's valid. It's definitely valid, James. Just remember that we're not seeing much more than a move to about the area of recent highs, 1790, that area. So yeah, if you can, it's buyable even now. It is. Yeah, it's sort of ran the stops, it's pulled back, which is not necessarily a problem because when we bought 1740 back on the 11th of August, remember it broke 1740, sank back down, we got long GLD, and then it went higher. I'm not looking for that kind of move again, but it's the same setup as what we did in August. You got it. All right, Donald, good morning. When it comes to trading something like UNG, okay, let's bring our trading view charts back into view. Sure, when it comes to trading something like UNG, how do you use seasonality to give you price projections? Do I ever use fibs? Okay, so remember this. Seasonals are not setups, never have been, never will be. It amuses me the degree to which traders will look at seasonals as anything but an inclination to do something at a certain time of year. Remember, the setup should overlap. It should be biscuits and gravy, right? The setup is the biscuit here, not the seasonal. So if I look at UNG, and the trade that we took in UNG before, and this has been exclusively long, is because of the structure of the market. Remember, I'm looking at the structure, and if we've got structure in one corner and we've got seasonals in the other, structure absolutely knocks out seasonals every time. What do I mean by that? When I start looking at the priority of seasonals versus market structure, seasonals are not something that I'll look at and say, well, if it's an uptrend, but the seasonals say we should be moving lower, I'm just going to have to short the market. Look, I think a lot of equities players tried this in August. They probably tried it in September. And they're probably going to do it in October too because of the seasonals, right? And they've continued to have been absolutely Donkey Konged. So I love the question. I hope I'm being as adamantly clear about seasonals as possible. They are not set up. They're just something that could happen, and it tends to happen with some consistency. Now you might say, Rod, that sounds kind of good. I mean, why would I not want to know that? Well, let's talk about seasonal issue number 2. Most folks use seasonals, I don't want to say wrong because that sounds kind of arrogant, but they use it really, well, wrong because they don't understand a couple basic things. They're not cognizant of the composite that they're looking at. In other words, what's the look back on the seasonals? 40 years? You look in futures, I can pull back seasonals 40 plus years, right? 40 years, 30 years, 10 years, 5 years. And if you're looking at the seasonals, are you debugging and detrending it? Because unless you debug and detrend it, you're not going to see that cycle that tends to happen. All right, then if you're looking at something like, say, equities or treasuries or currencies, right? Remember, seasonals were not born of these markets. These are inanimate objects. Seasonals were born of being a commodities trader since the late 80s. Corn, wheat, cattle, things that are grown, things that are raised, things that are sensitive to the time of year. Treasuries, currencies, indices, they're sensitive to central bank decisions, monetary policy. Corn doesn't care. Corn either is dealing with good weather, bad weather, moderate climate, right? There's a certain time you harvest. There's a certain time you plant. There are rhythms to growing things. And that's where seasonals really shine. Because, well, you look at the year, weather does tend to have a pattern. And when we deviate from those patterns, you'll oftentimes see the market and the seasonals go their own way. So, be careful. And I'll pull up UNG. Sure. Let's put up some natural gas here for you. Now, remember, when it comes to, do I have natural gas on this list? No, but we can pull it up. So, I get this question quite a bit. And the thing to remember about seasonals is I see them just darn right abused as if they have the ability to foretell the future. And they just don't. I wish they did. So here's natural gas. We do have a little divot that tends to come at the end of September, right? And then we tend to see a lot more strength. But if you're wondering, did I mention seasonals when we got long natural gas? Heck yeah, I did. Because we had structure, we had the pullback, and, right, biscuit, gravy on the biscuit. I must be hungry this morning. Biscuits and gravy sounds really good, actually. You can see that we were seeing that set up to the long side within the seasonality of bullishness. So a little bit of deep dive there. Do I ever use Fibonacci? I've been using Fibonacci since I was 15 and a half years old. So I'm a big fan of Fibonacci as well. For projections, not so much, because here's my problem with projections. Let's say you pull a Fibonacci projection on the last major move, all right? It's going to project you oftentimes into a level that goes beyond the current high. I'm going to utilize Darvis, recent highs, psychological levels, like 20 on UNG, before I start looking at hypothetically a projection that might be at 2170. That might be a second target, but it's not going to be the first. So there are some things where if I'm going to start projecting with fibs, we've got to be realistic about where that is in relation to the way price action has been moving. So I hope that makes sense. Terrific question. I do love to clarify the value of seasonals, but not the overemphasis on them as setups. Bad move. If you were a trader, commodity trader in the late 80s, early 90s, as I was, one of the things that you were inundated with the moment you bought anything or opened up a brokerage account, all of a sudden you got these flyers in the mail from, well, two people, Ken Roberts and Jake Bernstein. One guy was all about a particular pattern, and the other guy was all about seasonals. I'm not bad-mouthing either one of them. I'm just saying you got inundated by these. And so you're thinking, gosh, that seasonal thing makes so much sense. And wow, this reversal pattern makes so much sense. And you realize they're really good foundations, and they give you, and this is where I'm grateful to both of them. You get all these, and there's so many others. I'm just picking out those two. But then you realize if they give you the knowledge to seek out more knowledge, um, why did I start looking into Dow at a very young age? Because I got exposed to a very singular Dow pattern. Why did I start digging into seasonals and finding intraday seasonals? That's Larry Williams. I'm so grateful to those people who gave me the knowledge to seek out more knowledge. So you never want to end it there. Apple, like a lot of markets right now, it's choppy. Gap has been closed. This is tough. Michael, I'd probably lean on the XLK a little bit more, and I'd probably prefer Microsoft a little bit more. If I'm prioritizing structure, which, I do. I don't want to be short Apple. It's just a market that's now in a yellow chop where oversold buys are going to be what I'll be focusing on. So thank you for the question. Thoughts on sector rotation and XOP? I think there's two ways, Francisco. So first of all, I ditched the dogma of trading and investing. I think there's a lot of dogma out there by people who write books and newsletters and basically non-practitioners, which, when you're a trader and you're in the business of teaching people to trade, you start seeing a lot of things. I'm going to tell you guys straight up, right? There's a lot of things that sound good. And one of the things that sounds great is this notion of sector rotation. We don't know something's rotated until it's rotated. And rotation typically happens when a certain market, say tech, it has moved in a parabolic way that big money has zero interest in buying at those higher highs. Now, of course, retail traders do, which is a whole other conversation, which is why volume is such an important thing to understand in outflows, inflows, volume, if you're going to look at sector rotation. But the fact of the matter is sector rotation, we saw this in 2020, which is where you'll see a red hot market, folks start to take profit. Well, where do they then look for opportunity? Usually in the dumpster fire corners of the market. So last year, it was XLE, XLF, that when we started to see the rotation of tech, those started to benefit. So you look at what's really high, what's really low. The way that I say to think about it is the Ferris wheel. Somebody's got the top view, somebody's got the bottom, but it's always, twisting, and the bottom will eventually, go up to the top, and they get the great view too. So I don't see rotation, rotate. So if we talk about rotation, we have to talk about where's the money coming out from. If the money's coming off the sidelines, I call that participation. I don't call that rotation. So to understand rotation, Francisco, I've got to ask myself, where's it coming out of? What's moving lower as, say, XOP is moving higher? I think XOP, kind of going back to the earlier question that Donald had, XOP is your best corner of energy. Looks better than OIH, looks better than XLE. I think part of the reason is that with the strength we've seen in natural gas, XOP disproportionately benefits from that strength versus OIH and XLE, which is basically Schlumberger and Halliburton for OIH, Chevron and Exxon for XLE. XOP is also not a high concentration weighted ETF. So I don't believe we're seeing sector rotation, because then I've got to say, well, we're seeing outflows from one corner of the market, inflows somewhere else. I don't really see that in a really marked way. Although you could say tech might be. I'm not ruling it out completely, but what I'm really seeing, what I think we're seeing, is more money coming off the sidelines. And XOP is going to benefit from that, I believe, from natural gas. Do we have a blue light special on uranium? I know a lot of folks have been asking me, especially in the Sector Secrets room where we played uranium and CCJ earlier in the year. When can we get into uranium? We'll probably take a look at it pretty soon. I have not been in any rush, but if you want to put CCJ and uranium, we took a great run on this earlier in the year. Would love to do it again. Just need to see the setup. And I likely won't say today's the day. I'll look for a minor lower inside day tomorrow. I'll have to dive into some of the daily price movement ranges to understand the historical volatility implications of today's sell-off. But it's finally actually looking pretty interesting. Blue light special. It could be a really good blue light special, AJ. I'm with you on that one. And just like that, we are out of time. All right. So I hope that helps. And as always, gang, I'm sharing my opinion. I'm sharing what I actually do and how I look at the market. Remember, everyone's going to have a different opinion. Lots of folks will have different tactics, but the best thing that someone on this side of the mic and camera can do is share how they actually look at the market to make decisions and deploy capital. So as always, thanks for being a part of Charts and Coffee. Awesome questions. Appreciate the time. We'll be back here tomorrow, 9 a.m. answering questions. And, if you have those questions, you'll definitely get the real deal from me. I think that it's really important us retail traders stick together, support each other. And as always, thanks for being part of the crew. Have a great one. Be good to each other. I'll talk to you tomorrow.